Hello and welcome to the webinar, 7 Ways to Improve Your MiFIR Reporting. My name is Mark Hustler, CEO of Univista, and today we will look back at the first 9 months of MiFIR and to give you some insights into the most common errors and talk through 7 ways that you can take your transaction reporting to the next level. MiFIR Go Live has been a challenging time for the industry, and whilst the first 9 months have given the industry time to adjust, the regulators have made it clear that they're beginning to review the data and check if firms are reporting correctly. As the largest arm in the EU, we have processed circa 4 billion reports in the first half of the year, and the aim here today is to provide you with insights into that feedback and allow you time to understand the challenges in the industry and hopefully keep out of the public eye. Today we'll give you some insights into how that can be achieved, and I have joining me Tom and Alex, who will shortly provide presentations. Tom is Managing Director of Product Management, and he's going to look back at the 9 months and show you where the industry is commonly making errors, provide you with an update on the NCA statuses, and give you an insight into what the regulators are telling us. Our second speaker, Alex, a product manager in Univista, will concentrate on the MiFIR ancillary reporting regimes and explain how we're developing those services over the coming year. Finally, Tom will go through the 7 ways that we believe that you can improve the quality of your reporting. In terms of housekeeping, the webinar should last approximately 60 minutes. The presentations will be 40 minutes and will allow time at the end for questions. You can send through questions at any time by clicking on the tab on the screen. We'll try to get through as many of those presentations as possible during the webinar, so please do send the questions in. Throughout the webinar, we'll be asking a number of polling questions to give you an insight into where the market stands on certain topical issues. To participate, you can answer the questions, please, via the voting tabs at the time appropriate. And then finally, if you have any colleagues that couldn't attend today, or if you would like to re-watch the webinar, it will be available on demand from tomorrow via the same link you're accessing now. We'll also be sending a link out to the slides, and without any further delay, I'll hand over to Tom to kick off the webinar.
Thank you, Mark. So, MiFIR 9-month review, that happened pretty quickly. It seems like we were just here in January talking about the kickoff of MiFIR. So where are we now? Well, we're certainly not done, but there has been a lot of work accomplished in the last 9 months. As Univista, we launched a number of solutions to support the MiFIR regime. So from RTS 22, which is the main topic of our webinar today, to RTS 23 and commodities position reporting, which Alex would talk about later, provision of eligibility data to make sure you're reporting correctly, reconciliation services to allow you to put in place systems and controls, training, always a strength here at Univista, and very excitedly, because we're launching it right now, an introduction of our FinFrag reporting solutions to make sure we cover Swiss equivalent reporting today. The overall effect is that for clients that use an ARM as opposed to reporting directly, we see the rejection rates being about half of what the industry average is. Now, if you think about that, that doesn't sound like a great result. In MiFID I, our rejection rates were in single percentage points. So there are still certain issues that remain that are systemic issues, and we will talk about those throughout this webinar. So let me start with the polling questions. I've just described where we are at. How do you think it went? How have the last 9 months of MiFIR reporting gone in your view? Really well, better than expected, pretty average, worse than expected, or terrible? Answer using the polling tab below. While you do that, let me describe where we think the regulators are at. So recently the FCA had a 6-month review of MiFIR, and here are some snips from the presentation that they provided to their audience. And so they did it in a very structured way. First, they quoted some of the communications that they've had prior to go live, so communications about the need of the firms to make a genuine attempt to be ready to fulfill their obligations, and then they need to remain vigilant and constantly support the evolution of the business and the regulatory environment. And then they flipped it into, now that we're post-go live, all of those prior directions still stand, and your focus now should be on completeness and accuracy of your reports. And of course, in order to ensure completeness and accuracy, you have to monitor your reporting environment. This also echoes with our personal experience. So we as UniVista have met with a good number of major regulators throughout Europe and here in the UK. And the overwhelming feedback we're getting right now is that regulators are coming out of the project phase of MiFIR and now are starting to focus on the content of the reporting data. That, of course, varies from regulator to regulator, but overall, not only are they communicating that verbally, but they are starting to act on that mandate. So what are the main issues from the FCA's perspective? And keep in mind here, the reports that the FCA gets are reports from the arms, from the venues, and from some investment firms directly. So it is a mixture of sources. The issues that they highlighted are identifiers, and some of those are frankly quite surprising, that we still have issues with LEIs and national identifiers. Those would be the simpler things to get right. Investment firm covered by the directive, this is the now infamous true or false questions of UK branches of third country firms. Timestamps and providing them in UTCs, synchronizations of the timestamps is still an issue. Misuse of pending pricing, another commonly known issue. Net amount for debt transactions only. This is a validation rule, so the firms that use an arm, this should not be an issue. And then the last few are sort of continue to be confusing for everyone. So country of brand membership, there's not a good clarity as to how that definition works. The issues around reporting CDSs and FX swaps, and the ongoing dialogue between ESMA and ANA on TOTV. So really no surprises there, sort of the type of errors that you would expect as the regulation matures. What do we see here at UniVista? And keep in mind, we handle a number of errors so that the reports we send to the regulator should be perfect. But there are systemic gaps that we currently have, and probably the majority of it, and we suspect the majority of reasons why our rejection rates exist at all and are not zero, are listed on the slide. So one of it is the FIRD's reference data difference between what we have as UniVista and what the NCAs use. So there is a possibility currently that you will send us a transaction report that we will determine to be eligible, but it's not going to be in FIRDs, which is the record that the NCAs use to determine eligibility. And there's a number of reasons for that, and we will cover that later. But from a pragmatic reasons, that falls into two camps. So if your report is based on an instrument or an underlying instrument that's traded on an EEA venue, what the regulators said is if they don't have the corresponding data, you should contact the venue and point out to them that they're not sending the data through the RTS 21 that Alex is going to talk about to the regulators on time. However, if your report is based on a third country venue, so perhaps an American exchange where the underlying is listed in European Union and therefore is reportable, the FCA or the NCAs might never get that report. And so we think that once you get it through us, you pass our validations, we send it to the regulators, and then they reject it. In our opinion, your obligation here is done. The second issue that we keep encountering is the NCA system performance. There shouldn't be a surprise that even now, 9 months later, we still continue to encounter frequent outages and performance issues at many NCAs. This results in frequent backups. To be honest, they're usually cleared up by the weekend, but we run into situations where the trades don't get to the regulator on T+1. And again, here I think we need to be pragmatic. As long as you get your data accepted by us for the T+1, it is our responsibility to get that data to the regulator on time. And finally, there still exists validation interpretation between the NCAs. So application of error codes vary. Not all the regulators have implemented all of the mandated error codes. And then some validations vary from NCA to NCA. And a good example is the CON 571, again, the investment decision maker validation rule, which varies from regulator to regulator currently. We as an arm have to maintain a single set of rules to inject the data, but then we're not, we're happy to apply separate validation rules to individual regulators to make sure that we're always staying in line with their own validations. Finally, NCA connectivity. Frankly, I wish we were further along here. So we are connected to majority of the NCAs that our clients required us to connect to. We still have a handful that you see on this chart, and I appreciate the detail here is small, but I would encourage you to use the link that's listed above, where on daily basis we update the status of our connectivity efforts. We're very close to connecting to Luxembourg and Poland. We're also working on Estonia, Hungary, and other most Eastern European countries. Majority of the regulators that are left are not the ones that use the typical SFTP file transfer protocols, but are the ones that required bespoke API connections, where we had to go and develop specific software in order to be able to connect to them. Nevertheless, we expect over the next few weeks, maximum months, all of those should be solved. So now we have a polling question. What do you see as the biggest outstanding issue? Is it the remaining NCA connectivity? Is it the assigning of ISINs for OTC trades? Is it the quality and the scope of the FIRDS data? Internal technical problems with your infrastructure? Or implementing reconciliations as part of the systems and controls? Please answer using the polling questions or the polling tab below. So let me talk a little bit about what we plan to do to finish this up. So frankly, between now and the end of the year, we absolutely need to finish our NCA connections. This is our primary function as an arm, and we're committed to finishing this up. In addition to, and again I'm going to plug in Alex here, finishing up our services for Swiss reporting. We still have one chunk of functional things to do with the ARM, and that deals with using the ANA DSB ISINs for blocking and the resulting auto-submit functions for any of the ISINs that can become eligible after we get the report. We continue to invest in reconciliations. So we're just finishing up the three-way reconciliations that allow you to compare your data with the ARM and the regulator. We're about to launch or relaunch, because we had it before, the set of KPI reports that let you measure the quality of your reporting. And then we continue to invest in the additional modules. And again, I will let Alex talk about those. Alex.
Thank you, Tom. Thank you, Mark. Again, welcome everybody to today's webinar, and thanks for joining. For the next following 3 slides, I'm going to run through the main Univista MiFIR services, giving you more insights as to what has happened since 9 months since we went live, what are the biggest challenges that our clients are facing, as well as the main added value that Univista delivers as part of those products, helping our clients to improve their reporting. Starting with RTS23, which is MiFIR's instrument reference data reporting, which allows our clients to validate and send their instruments to the regulators, allowing their RTS22 transactions to be validated at the T+7 target time. Since 9 months, we have connected over 15 Tier 1 systemic internalizers to more than 15 NCAs, delegating or non-delegating. And we are standing ready to deliver NCA reminders and actually support them as part of a GUI, allowing our clients to get further insights as to the completeness of their reporting and whether an ISIN is reported throughout its life cycle of trading. What our service adds in terms of value to our clients is to help them significantly reduce their RTS22 rejections. And we have observed that happening since January 2018. Where we are at the moment is that as of yesterday, I think, we have forwarded and validated more than 1.2 million unique reports, with a great success of having less than 5% rejection rate on those reports. So the clients that we are targeting with RTS23 are firms with a MiFIR reporting obligation, which want to validate their instruments before forwarding them to the regulators successfully. The challenges that our clients are facing as part of reporting their instruments are twofold. First is reporting on time and at quality, and basically, obviously, maintaining a view across all their entities and all the NCAs they are forwarding their instrument reports to. Univista's added value as part of the RTS23 solution is to pre-validate your instruments with the latest ESMA validation rules and added Univista validation rules to ensure that your reports technically and business-wise meet the regulator and are accepted in time. Obviously, all our products, and more especially RTS23, have as a standard functionality the, I would say, fully integrating exception management process, which allows you to report many times a day the data that you like to report, and if an exception has been detected by our portal, to replay that report as soon as possible before the deadline is reached. We're now going to focus on our next MiFIR service, RTS21, which is the commodities position reporting service that Univista makes available to the market. Since the 3rd of January, we're live with 8 trading venues covering 10 plus markets. We have focused on the 8 biggest trading venues as a priority, including ICE, LME, and Euronext. We are now confident that those 8 regulators are helping you, actually helping our clients report their commodities position reporting on time. And we have more than 25 reporting entities reporting with us now, and we will deliver the added service of helping them monitor their position limits by end of year as well. This is the next milestone for commodities position reporting, in addition of helping our clients report their positions, either as trading venues to the venues which the instruments are listed on, or as investment firms to the NCAs for X-off derivatives or OTC, economically equivalent OTC, EEOTCs, known by the industry. We are also going to deliver a facility to monitor their position limits, be able to set up those limits in our tool, set up a regulator limit, which will be published soon, and set up their own internal limits as well, and monitor their positions reported to us through this tool, having access to pre-warnings and alerts as per their requirements. Since 3rd of Jan, we have successfully helped our client report more than 25 million lines of data with a registration rate of 10%, less than 10%, obviously. The last and final MiFIR service that I will cover today is FinFrag. FinFrag is the MiFIR equivalent reporting for Switzerland. Since 3rd of Jan, we are live with 12 firms connected to the SIX repository as part of our ARM service. We are looking to extend that to cover Swiss dealers, as our current solution covers only foreign dealers, which will basically complement our offering to cover Article 39 from FinFrag. Please note that as an added service to the current service, which allows reporting of MiFIR transaction to the Swiss regulator, including personal information, we will have the ability by the 1st of October, date by which we will allow Swiss dealers to use us to report to SIX. We will allow the use of internal IDs for any personal information related fields. So the biggest challenge faced by our clients with this product is obviously the quality and the reporting timing as well. Our solution, again, delivers an extended exception management facility, which allows to report several times a day, helping you match your deadline at the requested quality for your reporting. Over to Tom for the next slides.
Thank you, Alex. Thank you for covering this. So finally, 7 ways to improve your reporting. So in our experience, now that you've managed to get your data together and pass it to the regulators, there are a number of things that you can do in order to make that reporting process better. So first of all, of course, we need to fix any of the common errors, and we'll talk about those. Use the reference data prudently to make sure you're reporting correctly. Reconcile for your systems and controls. Understand your statistics, so know where you are with your reporting process. Understand how you benchmark against your peers. Invest in your staff, and finally integrate your reporting to make both MiFIR reporting and other reporting regimes more efficient. So let's look at those quickly. So fix most common errors. So here we're talking about validation. So this is from the FCA's perspective, and again, keep in mind that this is a mixture of ARM data, venue data, and investment firm data. They've basically put their top validation errors in 3 buckets. So instrument validation, so the instrument or the underlying, it does not match the reference data. And again, we've talked about this before. This is the one area where we see a consistent gap between what the ARM can do and what the regulators are doing. Content validation deals mostly with validation rules. So country of branch membership is missing, commodity derivative indicator is missing, instrument classification is incorrect, no underlying reported for a swap transaction, net amount is missing. Those are all validation rules that an ARM can automate so that you get a rejection from the ARM and not the regulator. And finally, duplication. And duplication simply deals with workflow. So checking for duplicates is again one of the validations that the ARM should absolutely provide. So using an ARM, you can be pretty certain you're not going to have content validation errors and you're not going to have duplication errors. But we still are working ourselves, and I know that the regulators are also working to close the gap on instrument validation. So what are the rejections from our end? Well, interestingly, they kind of fall into 3 buckets depending on how large of a firm you are. So for our largest, mostly tier 1 clients, majority of the rejections that we send back to them deal with workflow. So the duplicates, canceled, mandatory fields, things of that nature. This is most likely because of the complexity of their reporting infrastructure, the amount of system, the complicated life cycles of each trade that they have. Medium firms, if you look at our rejections for medium firms, majority of the errors are around eligibility. So rejections because of the instrument or the underlying instrument is not reportable. And for small firms, it's a bit of a mixture of the bug. So some validation errors, national currency for a particular CFI attributes, along with sort of block and tackling issues around XML schema and workflow. And that's perhaps a reflection of the maturity of their IT infrastructure and their reporting process. Improve your reference data. Again, we're back here to FIRDs. So we find ourselves in this sort of a perhaps funny is not the right word, awkward situation where the regulators are telling us that the FIRDs data cannot be used as the only or golden source, yet that's the data that they use in order to determine what's eligible or not. Now we know that NCAs realize that this is a problem, and we know that they are working. There's actually a FIRDs group where the regulators meet regularly and they have a plan of action to improve the quality and the consistency of FIRDs. However, by design, FIRDs will always lack some data. So instruments that are listed outside of European Union, where the underlying is reportable, will not be part of FIRDs. And baskets and indices, where one of the constituents is reportable, are not part of FIRDs. So there's always going to be this population of trades that we as an ARM using our reference data might deem reportable, where the regulators were not. However, we think if you reported those and you got it approved by the ARM, your obligation is done. We, of course, provide MiFIR eligibility data. There are other vendors out there that you can get it from. But we would encourage you to use eligibility data either yourself or through services like our blocking service to make sure you're reporting correctly. Reconciliation. Well, reconciliation has now moved from being an operational nice-to-have to something that's mandated by the actual regulation. So RTS 22 Article 15. However, it says that you should always reconcile between you and the ARM. I think that's pretty obvious. But the reconciliation between you, the ARM, and the NCA is only possible should the NCA provide extracts. And I think we've heard from many NCAs that says they intend to provide those extracts in the future, and we're planning to support those. But currently, it's only FCA, MFSA, which is Malta, and Central Bank of Ireland that actually provide extracts that let you check what got reported to them on your behalf. The best practice we currently see is that firms daily reconcile between the firm and the ARM, and then periodically, perhaps a day a month, a couple of days a month, they're planning for the firm to ARM to the NCA reconciliation. You can use third-party reconciliations should you choose, and we have Univista data extract that lets you replay the data that's sitting in the ARM. And we have partners that can provide completely outsource reconciliation solutions for you. But we, of course, think the easiest thing is to use our reconciliation module because it automates the whole process. It automatically pulls the data from the ARM. It includes ingestion of the data from the regulator, etc. So should you want to do it in-house, you can use the UniVista reconciliations module to accomplish that function. Lastly, I'd like to say, and I've put the graph there from the FCA's 6 months review, is that the FCA is actually monitoring how many firms are taking the data back out in order to reconcile. So they are paying attention to whether or not you are taking attempts to have systems and controls in place. Know your stats. Well, this should not be a surprise to anyone. As any process, if you cannot measure it, you cannot manage it. So systems and controls are quite important here. Operationally, the ARM itself provides you daily KPIs to know how you're doing today, and then a time series analytics in the actual user interface. We're also relaunching in October our free monthly KPI report. So this is an actual report that you get monthly that assesses the quality of your reporting infrastructure. And for many of you that have multiple entities that report, it goes throughout the entities in your organizations. And then we're also very excited to work on the upcoming UniVista Analytics module that will allow even more insight. So here's where we're talking about surveillance, machine learning, pattern recognition, and other state-of-the-art big data techniques applied to this data, just to give you more insight and value from the data that you've reported to us. Know your benchmark. So as important it is to know how you're doing internally, really the really insightful metrics is how do you compare to others. And your performance, of course, is relative. So it's relative to the quality of the data that the MCAs get as a whole, but more importantly, it's relative to other firms like you. You know, the regulators also need to look at the data that's been reported and based on some sort of a criteria, pick whose door to knock on to ask questions or suggest corrections. So in the past, under MiFID I, we had what we call a peer-to-peer report, and we're happy to be relaunching it now using our new architecture, probably Q1 2019. But what that will allow it to do is for us to compare your performance against the other population of firms that report to us, and you know, we can benefit from the fact that we're one of the largest arms. But more importantly, it's not just you versus everybody else, it's you versus your peers. So we have classified firms into investment bank, large asset managers, small asset managers, hedge funds, etc. So that you will know where you stand exactly as far as the quality of your reporting against other firms like you. Train staff, again, you know, this I think is pretty prudent and common sense. So A, it's mandated. The ESMA mandates that firms show that they have the correct systems, controls in place. It definitely improves the accuracy of your reporting. So not only does the regulation require skilled and trained resources or personnel, but in our experience, when we look at the issues that we're facing, majority of exceptions are caused either by human error or by misinterpretation of the regulations themselves. And finally, motivate your staff. Studies have shown that 70% of staff say that job-related training is the reason why they stay in the job. This is a very specific and niche area of expertise, and I think people that work in regulatory reporting enjoy becoming experts at the job that they do. At UniVista, we're always trying to help. We have a number of existing certified and accredited regulatory training courses. We have just launched the new e-learning online regulatory courses platform. We also provide bespoke, on-site, and remote training courses, as well as a lot of training about our products themselves. So it's a combination of regulatory training, you know, EMIR, MiFIR, SFTR courses, etc., and actual application training so you can apply our technology to your new regulatory knowledge. And finally, integrate your reporting. Well, there's no doubt in my mind is the reason why we're the biggest arm in the UK and one of the biggest in Europe is because we decided to consolidate multiple reporting requirements onto one platform. It streamlines your IT architecture, providing cost and risk reductions. A single vendor decreases your third-party risk, so you can keep an eye on us very closely. The platform itself allows you to currently service multiple regulations using one team. So you can apply the same best practices on a team that's focused on regulatory reporting across multiple jurisdictions and multiple regulations. So there are efficiencies in the process, but I think the exciting thing is the opportunity to leverage this infrastructure that we now had to build up for actual revenue generating opportunities. So we have a number of clients that use their regulatory infrastructure to provide delegated and assisted reporting services. So actually either providing value or making additional revenue from their clients. There are certainly many opportunities to use the data. So we're looking at how we could use the collated and scrubbed data that we collect for regulatory reporting for things like forecasting, analysis, derivations of other attributes, etc. And finally, you should leverage your arms. We have data from, not just from you, but from many other firms. And based on this large population, we can derive additional data on the firm, the market, on benchmarks, patterns, etc. Of course, we require your permission and blessing to do all those things. So any ideas you have, we would be happy to hear about. And finally, it's synergies. So putting everything in one platform definitely has advantages. And I think it's not just us, the regulators are also thinking the same way. So they will always say that EMIR, MiFIR, and now SFTR have different purposes. Therefore, by nature, they will be different. But they are pushing to standardize as much as possible because they realize the burden that all this regulation places on the industry. So all of those regulations are either driven by directly or coordinated by ESMA, and you can see their stamp on articles that span multiple regulations. As much as possible, they try to reuse the same standards and reference data, streamline approach to kind of major topics such as extraterritoriality, common approach to systems and controls and the importance of those, importance of reconciliations and quality assurance. The same themes are now being applied across these three regulations. And finally, I wouldn't want to forget FinFrac because that's the one we're launching on October 1st. And again, it's an attempt by the Swiss regulator to provide something that's equivalent to European regulations to lessen the burden of both European and Swiss firms. So there's a definite trend there on the regulatory delivery angle to streamline those regulations, which will provide synergies to you as well, and an infrastructure that you can leverage for years to come. Let us finish up with the polling questions. So who do you intend to use for your SFTR reporting? This is on that subject of leveraging the infrastructure you already have. Are you going to use your MiFIR provider? Are you going to use your EMIR trade repository provider? Are you going to use a dedicated SFTR new provider? Or do you not have an SFTR reporting obligation? So please answer using the polling tab below. And I will, with that, pass it back to Mark.
Thank you, Tom. Thank you, Alex. A lot of questions have been coming in. I'll try and summarise and use the time available as best we can. Tom, I'll start with yourself. So if we look at EMIR as an example of a regulation that went live a few years ago that has evolved significantly during a very short period of time, a lot of the questions coming in are around that ESMA direction for regulatory change, and you alluded to harmonisation there at the end of your presentation. So with that in mind, are there any indications of change to the regulation in the short to medium term that customers should be considering?
I knew somebody was going to ask that question, so I actually wrote it down. So the regulators have hinted at changes coming in Q4. So some of them are changes to the CFI definitions, so tweaking the codes for warrants, for example. There's some clarifications, so clarifications to the rules for investment decision maker. And then the one that's probably going to be most impactful, both to us and the reporting firms, is there will be schema changes in Q4. So the actual structure of the data we're receiving will change, which means that we will have to change the field specification that we issue to the firms. Mm-hmm. So we know they're trying to tweak things in the short term. I think in the long term, just like EMIR went from level 2 and level 3 major structural changes, again, once the regulators start looking at the content of the data and understand what it is that they're actually getting, they will probably come back with long-term revisions to let them adjust the data so that it can match their exact needs.
And aligned to that topic, if we go back to MiFID I and we think about the regulatory sanctions, the fines that were handed out, I certainly took from speaking to ESMA and NCAs directly prior to go live that there was an acceptance of a period of bedding down, a pragmatic approach, I think was a term I heard regulators use frequently leading into MiFIR, which kind of left me with a feeling that there'd be no hard regulatory enforcement in the first period of MiFIR. Do you feel that we're still in that period of pragmatism, or do you think with signs that regulators are now using the data and the dialogue changing? How do you see that evolving, and do you think we'll go back to a sanctions regime?
I think definitely we will end up in a sanctions regime at some point, but I think we're currently at the cusp. So the feedback that we've got from most of the regulators is that as long as firms are making an effort currently and are coming forward and being clear about the issues that they have and proactively fixing them, they're lenient. But if you're just plainly negligent, I think their line will still be that they will not be in a mood to be tolerant in that case. And actually there has been some news recently about a large American bank being in a bit of trouble around their systems and controls for MiFIR reporting specifically, which means that they are starting to look at the basics, such as applying eligibility, and flexing their muscles to make sure that firms fall in line.
And where the firm has a set of errors to fix or feedback from the regulator that there was transactions missing in the first period, I think the industry, we would certainly refer to that historically as what we'd call a replay project. What is the advice there in the context of fixing errors in a speedy fashion?
Yeah, well, I think the short advice would be fix it first and then tell the regulator later. But we definitely see a lot of that. So I think we have been quite busy actually in these first 9 months, perhaps not surprisingly, with backloading of data. So firms either proactively recognized that there was an error or the regulator pointed it out. But to your earlier point, I think regulators have been pretty lenient so far. So they've said, okay, great, here's an error, fix it, and we report it.
Understand. I'll move on. I'll come back to you, Tom, because I've got a few other points which I think are probably in your camp, so to speak. Systematic internalisers. I think that the regulation is fairly clear now on what we need to do if we identify ourselves as a systematic internaliser. But what advice could we give if firms are still struggling to understand the rules there and how to determine if they fall into that set of rules and what they need to do off the back of that?
So the first advice we would give is to follow closely when ESMA publishes its SI regime calculations online. And obviously we, as part of our RTS23 solution, we stand ready to accompany our client getting on board, reporting their transactions. Now, what's specific to systemic internalizers is that they have to report in specific asset classes, which calculations and whether they have to report it or not. The indications are published online. But as part of London Stock Exchange Group, we work closely with TradeEcho. TradeEcho has put in place a solution which will help SI calculate whether they are in the ranges that force them to mandatorily report their transactions as part of those asset classes. And we, on the back of TradeEcho, helping our clients determine their SI status, we stand ready to onboard our clients, future clients, as soon as possible. And obviously the experience we've had since the 3rd of Jan with connectivity brings us a good amount of experience to help onboard our clients as soon as possible with the regulators we're connected already and with any new regulators we will have to connect to on their behalf.
Thank you. And on that topic, lots of information on our website, I'm sure, to help clients understand. Back to you, Tom. Reference data. Now, we could spend a whole webinar on reference data. A couple of points that are coming out of the back of your presentation. The sources of data that we use include FIRDs, but other sources. Maybe you could just elaborate a little bit on that. So that's the first part of the question. What sources do we use? And from a FIRDs perspective in particular, do we believe that there will be significant improvement in the short term, particularly where clients are submitting correct transactions but they're being rejected without any information from the NCA as to why they're being rejected? So again, sort of in summary, there's still a lot of confusion, I think, around what sources should be used and where there is a belief that the report was correct but the NCA disagrees. What is the general advice there?
Yeah, so again, I think the first issues come into two camps. So one is the scope, and one is one of the timing. So as far as scope, we very early recognized that we cannot rely on FIRDs alone. So we've procured data from independent data vendors. And many times we go to the venues directly and then get the same data from the vendors to make sure that we have the quality of the data that we need. We've also reached out to vendors outside of EEA, as I mentioned before, for those transactions that are extraterritorial to EU. And FIRDs was never going to get that data simply because, ESMA doesn't have the mandate to ask NASDAQ for the trades listed in New York. Then the second part is around baskets and indices. So again, there's regulations around those now, and many of those get ISINs, but even if you get an ISIN and it gets marked as reportable, the constituents of the index change constantly as the index's business goals change. So we actually buy data from third-party vendors. We get data from FTSE Russell here at the London Stock Exchange to constantly kind of keep an eye out which one of those are actually reportable or not. So I think the quality of the data from FIRDs will improve as the regulators work with venues to get their data accurate. But there will always be gaps where we think our sources of data are more accurate, more to the spirit of the regulation, I guess, than what the regulators can provide.
And just moving on from that, you mentioned earlier about blocking certain transactions at the arm level. I think the terminology I would use is eligibility checking. So if you could just explain, what are we offering in that space around eligibility checking, and what advice would you give to clients?
So I think that's a good lead way to the second FIRDs issue, which I guess is timing. Right? So the way that FIRDs works is at the end of the day, the venues send their data to the NCAs or the ESMA, who then collates the data and provides it the day after. So in essence, the regulators that use the data to check for eligibility only have FIRDs available 2 days after a particular transaction has happened. Well, many firms report on T or T+1. So our eligibility checking or blocking could stop that transaction simply because of the timing of the data, which is why in our next release for the ARM, now that we're starting to do eligibility checking, for example, ANA ISINs, we also want to pair that with the ability to then auto-submit any transactions that become reportable in the day after. I think we're extending it even to 7 days, as the regulators do, to give that reference data a chance to catch up.
And the timing of that, I think it's also important for everybody to understand from a regulator's perspective their start of day, because if I understand correctly, some of the NCAs, for example the FCA, are very reliant upon that FIRDs database being provided early in the morning in order for their same-day generation processing to commence. And I think there's still a bit of confusion looking at the questions coming through as to the delays on a regular basis that NCAs seem to be struggling with. And is the connection there of a start of day of an NCA starting late purely to FIRDs, or is it IT systems? Is it getting better or worse? Again, what is the general advice?
I think it's a combination of the two, but the NCAs have not been shy with pointing some of the delays onto FIRDs. So either the data from FIRDs arrives late or doesn't arrive, in which case they have to use the data from the day before, which makes, in that case they need to load the data from the day before, kind of backtrack the whole system, and then proceed with processing. So we hear of examples where they cannot start processing transactions till noon, for example, because it's only by that time that they've gotten through processing of late FIRDs data for that particular day.
Understand. NCA data, you mentioned the consumption back from an NCA for the purpose of reconciliation. I think you said FCA and a couple of other regulators such as Ireland are offering that today. What is the best practice way of requesting that information, and can, for example, services like Univista fully automate that process, or does it still require the client to have some degree of manual interaction?
I'm going to let Alex.
Even better, Alex. Please do.
Well, what we've observed since we're working on the subject early on this year is that the regulators and also the way the volume limits on each portal plays out makes it difficult for firms to reconcile their NCA extracts every day. So what we've seen through our working group as part of developing our MiFIR reconciliation product is that our clients have either chosen to reconcile once a month and up to 10% of their monthly volume. or just pick a set of 3 to 4 dates for the months and randomly reconcile these as part of their extracts. What's sure is that our tool provides the ability to reconcile as much as you want, so we keep it flexible for our clients.
And if, again, it's kind of partly linked into reconciliation and also transaction reporting in general, but if a client has requested an LEI code, either through Univista or an alternative provider of LEI codes, is there a delay from the point of that LEI being provided to it being recognised via the regulator and or the ARM? Because again, there seems to be some transactions failing the validation state where LEIs are still available, but waiting to be fully ingested by either the ARM or the NCA.
Well, there shouldn't be any delays from the ARM perspective. I think we reconcile with the GLIFE database daily, so the same day you register your LEI, we should have a record of it in the ARM. The regulators are a different story. So how quickly does the GLIFE data get reflected? And I think some regulators, and Alex will have more experience with it, actually require you to register your LEI as a reporting firm with them before they even accept the transaction report. So you cannot just send a report with an LEI that they cannot recognize. Their systems will not process it. So for some regulators, it's part of their architectural design that you need to, ahead of time, provide them with the record of your LEI.
So I think Alex, you probably said that to assist the clients asking this question, maybe the best advice is for them to contact us, contact customer support, and we'll obviously look into that to understand if it's an ARM issue, but sounds more likely to be an NCA issue.
Definitely.
And it will very much vary from NCA to NCA what that process looks like,
exactly.
that onboarding process looks like.
Okay,
Therefore, contact us first, and then we can provide further information. But on the earlier question asked by our audience, whether we're looking at automatizing the NCA extracts, what I would say is that what we've observed so far is that the NCA doesn't make it, and no NCA at the moment makes it possible for us to even connect to them to request these extracts. I think lots of NCAs are already struggling with the reporting volumes and don't want to start struggling with the extract request volumes on top of that.
Right.
But obviously, as soon as it's possible, we'll look into this, and we are
So
conscious.
on our side, when we refer to automating the process, I think, correct if I'm wrong here, but we're talking about the automated process between the client and the ARM, and the automated process from the NCA's data being ingested into Univista. But
I would say just the NCA extract, because the client ARM extract is automatic, by the way, it's a standard functionality.
But there's still, I think the point here is that there is still a requirement of the individual firm to liaise with the regulator on a periodic basis to request that data, which is a manual process. Exactly. At the point of collection, it can be automated through Univista or other reconciliation tools. Exactly. Okay. There's one question which has been coming through loud and clear, and I've left it to the end, Tom, or Alex, I'll let you decide who answers this. What is the answer on Brexit? Now we're not talking about the whole political environment of Brexit, specifically in the context of MiFIR. And just to kind of help you answer that question, I think the general theme of the questions tend to be around the UK equivalency, the regime that the FCA are looking at implementing, yes. And interlinked into that, where an organisation has to report to multiple NCAs, both here in the UK and an NCA or multiple NCAs in Europe. Do we envisage a scenario where the client has to report the same trade twice, or do we think there'll be a process of interoperability of sort between the UK and the EU? Okay,
well, let's maybe start with where we are at, because I think that's quite telling. So, as investment firms, as infrastructure providers, we were also told to plan for the worst case scenario. For us, worst case scenario means that we need to establish a legal entity to service the EU clients in the EU, and we have done so. So we have an entity now in Amsterdam, whose mandate will be to provide EMIR Trade Repository, MiFIR ARM, and APA reporting services.
And SFTR in the future.
And of course, yeah, SFTR in the future. Thank you. With that comes a number of new applications. So that for the ARM purposes, that ARM will have to be certified and licensed by the Dutch regulator, the AFM. So we have submitted the application, they're reviewing it, and we expect some good news shortly. And then we're in talks with the FCA around, to your point, the equivalent UK regime once the ARM service separates. So I think for now the FCA has said that they will have a streamlined procedure where the existing ARMs can just register themselves. And in the long term, they will require a more detailed application process. So again, it's encouraging to know that they're thinking of how to minimize the disruption to the existing service and the existing infrastructure. And I think that is our goal. Our goal is to basically minimize any impact on the reporting firms.
So I think, is it fair to say then that from a hard Brexit scenario planning, your arm, Univista or alternative arms, I'm sure are the same as us. Yes, they will be regulated both in the EU and the UK, and continue to have that multi-NCA connectivity that we, for example, already have. So from a client perspective, the technology change should be zero. The routing of the transactions to the relevant NCA should be zero change, because we're already connected. But I think the area that we're all, including ourselves, waiting for feedback on from the regulators, and it's part of our dialogue with ESMA and FCA, is at a transaction lifecycle reporting level. There's so many scenarios, dual reporting, delegated reporting, assisted reporting. Don't have the time to go through it today, but there needs to be better guidance. There needs to be clear guidance. Otherwise, the risk, of course, is that the industry will be duplicate reporting a whole host of transactions, arguably unnecessarily. Is that a fair
I think
summary?
That's a very fair point, but I would perhaps finish that topic with the fact that as a technology provider, whatever the outcome is, we will have a solution for it. So since we can use the existing infrastructure, we might have to adjust some legals. If we need to determine where a particular transactions go to, we can put together rules to do so.
Understand. Well, we've run out of time, so thank you for answering the questions so well there. And thank you all for joining us today and sending in all of your questions. We hope you found the update useful. Please do follow up if there are any questions that we haven't answered. We'll be sending out an email at the beginning of next week with a link to an on-demand version of this webinar. Plus, you can find other webinars that we've hosted in the past at lseg.com/Univista. So again, thank you for joining and have a lovely afternoon.